Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. Then we're going to talk about why Cathie Wood is selling her TSLA stock, which is her Tesla shares, to buy General Motors stock. So we're going to be going and doing a deep dive for that, and then lastly, we're going to be doing an update on NIO stock to determine if all of these stocks are good buying opportunities and why NIO stockholders are actually going to have a catalyst coming up here on May 12th, and even more good stock news for NIO stockholders. So for more price targets on the PLTR stock, the TSLA stock, and the NIO stock, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about these companies, and without further ado, let's jump right into today's stories. So Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. Currently, the current PLTR stock price trades at around $6.70, with the low-end analyst price target coming in as low as $6, which is actually a new bearish price target. The average analyst price target for the company sits at around $12 per share, while the high-end analyst price target is $25 for the next 12 months. We are also going to go over a new price target by Morningstar for their fair value price later in this video, but right now we just want to do a news update because the PLTR stock today has fallen around 6%, and ever since their earnings report, which came out on May 9th, which I did a video on previously, the stock price has dropped more than 21%. Despite this very bearish and negative development for the PLTR stock, their revenues overall, according to their earnings report, rose by around 31% year over year to $446 million for the first quarter, which actually exceeded and beat analysts' projections by around $2.5 million, which is actually very good news for the company. Also, a 31% increase beats their overall projected revenue CAGR, or compounding annual growth rate, by 1%, because ideally, year over year, they want to have improvements of over a 30% compounding annual growth rate for their revenues, and this is going to be their long-term target because they're supposed to be improving their revenues by a basis of 30% until 2025, which is absolutely phenomenal. However, despite this, their EPS, which is their earnings per share, did somewhat disappoint because it missed their overall expectations by around 2 cents, and their second quarter projections for Palantir is supposed to set their revenue growth at around 25%, which is less than that 30% that we talked about earlier. So that's not necessarily good news, but for their quarter one results, I would say in general it was pretty positive. Another negative development for the company was that Palantir's government business is starting to stall out. However, their commercial segment, which I've said multiple times in past videos, are supposed to more than make up for any lack in their government segment. For instance, on screen you can see quarter one from 2021 all the way to quarter one of 2022, and as you can see, as time has progressed for these last few quarters, their government segment has actually lowered in their overall revenue income. However, on their commercial side, this has either stayed stable or even increased quarter over quarter, which is phenomenal news. Clearly, their commercial segment is what's keeping their total revenues afloat, and this is why we could slightly see a small drop-off in revenue for the second quarter due to their government contracts getting hit pretty hard. However, their government clients are going to bring in stable revenues for the company, while their commercial clients are going to continue to expand the overall revenue guidance for the company in general. So overall, that is pretty good news. However, because the PLTR stock is trading so cheaply right now at around $6.70, how should investors play this stock right now? Well, the good news is that the further the PLTR stock price drops, the better and cheaper it becomes, which means it's less risky. Right now, the PLTR stock is trading at less than 8 times this year's sales, which is very good for an aggressive growth stock such as Palantir Technologies. However, the author of this article says that because Palantir is not set to reach profitability, and right now they are an unprofitable growth stock, and they're not intended to reach profitability until 2024 to 2025, he doesn't recommend buying the company right now because there are other higher quality growth stocks that are on sale right now, and he mentions Twilio in this video. I would also want to throw in SoFi Technologies as well, but overall, because the PLTR stock has fallen so much, and because their PS ratio, or price to sales ratio, is below 8 times, which is below 10, which is definitely ideal, this could be a good buying opportunity as long as you are already not overexposed to the stock. More good news about Palantir Technologies is that the company, according to this article, their weighted average share count only rose by 1% sequentially in the first quarter, which means that their aggressive stock dilution has actually started to teeter off, and the author of this article thinks it's eventually ending very, very soon. So investors shouldn't worry about stock-based compensation too much, or at least a dilution in this manner, because eventually it is going to completely stop, which is phenomenal news. Now, for that price target, like we were talking about earlier by Morningstar, Morningstar originally had a $31 fair value price target for the year of 2022 for the company, but they have since lowered that price target down to around $27, which is still a huge development because the current stock price is trading between $6 to $7. So at minimum, if these investors and these analysts are correct, you could look at easily quadrupling your money with this stock as long as everything goes well. But because the current stock market environment is so volatile and negative right now, maybe holding off and waiting for a better deal might be ideal regarding Palantir Technologies at this time. However, overall, the company is still fundamentally solid and they have strong growth ahead of them, at least until the year of 2025. Moving on to our next story, we're going to talk about Tesla and GM and why ARK Invest and Cathie Wood are selling some of their TSLA shares and buying General Motors stock. So Tesla, as you all know, is an electric vehicle manufacturer, and they also do a lot of other things, but they're most notably known for making electric vehicles that are extremely fast and successful. Tesla and the TSLA stock as of today has almost fallen around 10%, where the current stock price is trading at around $730 per share, while the median average price target for the company is around $991, and the high-end bullish price prediction goes as high as $1,620 per share. If we pair that with General Motors, which is currently trading at around $37, the low-end analyst price target for GM is $40, the average price consensus is $64 among professionals, and the high-end price target or price prediction for the company over the next 12 months is $98 per share. And what's shocking is that Cathie Wood is a perma-bull and very positive when it comes to Tesla, so it really shocked investors and shareholders of Tesla by seeing her sell her Tesla shares and buying up some General Motors stock. So many investors are wondering why this is. Well, if we look at the most recent report, which came out on Monday, Cathie Wood of ARK Invest sold around 15,862 shares of Tesla, which is worth around $12.7 million, and she bought around 158,157 shares of General Motors, which is worth around $6.1 million, and the remaining money she put out and diversified her portfolio because she says that this is a fantastic time to buy stocks, and I tend to agree with her. Now, I also want to say that this shouldn't be a huge surprise because, like a good investor, Cathie Wood is cutting her risk and taking profits on Tesla shares before the stock price drops even more. And this ensures not only her profits, but it also allows her to diversify into other companies while not being too exposed to this one mega cap stock. Surprisingly, Cathie Wood did not invest into General Motors because of their exposure to electric vehicles and the EV market in general. She actually decided to invest into General Motors and add them to her ARK Autonomous Technology and Robotics ETF is because General Motors is helping fund a Robo Taxi company named Cruise. Considering the current stock market environment, Cathie Wood says that innovation stocks are not in a bubble, and they believe that they are in deep value territory, which is absolutely phenomenal, and I tend to agree with her because right now a lot of growth stocks, which have been hit very hard over the last couple of months, have done absolutely nothing to actually deserve this giant downtrend. It's basically investors are freaking out, so they are liquidating their aggressive and risky growth stocks, which has hit innovation stocks very hard, which trade on a future multiple, and I tend to agree that right now could be a good time to buy very aggressive growth stocks as long as you are not already overexposed to these stocks and if you're practicing proper risk management. Now, talking about electric vehicle makers, let's talk about the good news for NIO stock. Right now, NIO is trading at around $12 per share, which is a huge discount from what the company was trading at just a couple months ago, because this company used to trade between $30 to $40. If you didn't know, NIO is a Chinese electric vehicle manufacturer, and they have seen fantastic success over in China and across the globe as they continue to expand. The low-end analyst price target for NIO stock is $19, which means that we have a huge buffer of safety if we decide to buy the stock right now. However, this is going to be a risky stock, and we were going to talk about the risks later in this video for it. However, the average analyst price target for the next 12 months is $40, while the high-end bullish price prediction is $85 per share. So clearly this stock has gigantic upside. Now, the author of this article points out that investors are going to receive a catalyst for the NIO stock on May 20th. And what is this particular catalyst? Well, NIO stock has been under scrutiny lately because because of their chance of being delisted from the overall stock market, and I have multiple videos talking about that a few months ago. Basically, there is a law that came out that says that if various foreign companies do not follow proper auditing protocol and policies in the United States, that they are threatened to be delisted. So NIO is hedging their bets by not only being listed on the New York Stock Exchange and even the Hong Kong Stock Exchange, but they are also diversifying and being listed on the Singapore Exchange. So now they are going to be listed on 3 separate exchanges. So even if they were to be delisted on the New York Stock Exchange, they are still trading very healthily on 2 other exchanges. So this could really give investors something to look forward to, which could act as a fantastic catalyst for the NIO stock price. NIO also has confirmed that they have received their eligibility letter to actually pursue being added to this Singapore Stock Exchange, which I view as very good news. So overall, this is a very positive development for NIO, despite the stock pulling back very aggressively as of late. Lastly, we have another fantastic catalyst for NIO stockholders, which is that NIO is planning to build a new factory. Now, although this is very bullish and positive, I do want to say some bad news regarding NIO, and that is because Norway's central bank actually dumped their entire stake of NIO and completely liquidated and got out of the company. Now, there isn't a lot of focus of why they did this per se, so I at least want to put that on your radar that not everyone is overly bullish about this particular company. Now, the good news surrounding NIO right now is that they have signed an agreement to partner with another company to build a plant where NIO is going to build more of their vehicles, which is going to be fantastic news. And this new production plant is set to start production as early as 2024. This is going to allow NIO to launch its mass market branding strategy over the entire world, because it's going to increase not only their brand awareness, but the amount of cars that they are going to be able to manufacture. NIO's CEO, who is William Li, actually said that the company will not be following in Tesla's footsteps by launching various vehicles with giant price gaps. And what that means is they're not going to produce low-end cars and then super high-end cars. But instead, NIO is going to live in the price ranges of $30,000 to $50,000 so they can sell their vehicle to the majority of people. So this just goes to show you that the investors that are currently panic selling growth stocks, including NIO stocks, could look back at this moment in regret as a good buying opportunity for all 3 of these growth stocks, being NIO stock, Palantir Technologies, as well as Tesla, and even General Motors in some cases. Now, out of all of these companies, I am probably the least bullish on General Motors. So the top 3 for this video is easily going to be Palantir, NIO, as well as Tesla. But I would love to hear your thoughts and your price targets for NIO stock, Tesla stock, and Palantir Technologies. Remember to go and smash that like button for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.